Clem Chambers joins us today. He is a CEO of Online Blockchain, and he's back to give us his outlook on stocks, Bitcoin, and gold. Why has everything been moving together? What's next? Will these correlations fall apart? Will the economy fall apart, or are we on track for more growth? Stay tuned and find out. This episode is brought to you by iTrust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%. If you'd like to open a new account with cash or roll over an existing account, and if you're over 18, click on the link down below, itrust.capital/David, or scan the QR code here to learn more and get started. And you remember, if you fund your account using my referral link, you'll get a $100 signing bonus using that link. Clem, welcome back to the show.
Yeah, great to be on.
It's just interesting to me, observing from the outside, how all the major asset classes up until now have been moving more or less in lockstep with one another. Gold, stocks, Bitcoin all moved to new all-time highs until a couple weeks ago. They've been pulling back again in tandem. And what's interesting is gold, which we'll talk about, has been moving in lockstep with the dollar. The US dollar typically moves inversely with gold. That hasn't been happening in the last month. Why is everything moving together, even though historically that hasn't been the case?
Well, as far as I'm concerned, a lot of the markets out there are effectively cornered, and they're cornered by central banks and particularly the Federal Reserve. So because there's a market corner and the market is being controlled by one big player, the Federal Reserve, it's all about what they do. And the Federal Reserve is turning the money supply on and off to suit the anti-inflation, don't crash the economy narrative. That obviously that's really what they're all about. So if they think they can turn the money off, they turn the money off to try to get inflation down. And then when things start to get a bit sticky, they turn it on again. So when they do that, when they turn the money off by, for example, pushing bonds out there, assets go down in value. And then if it starts to go down a little bit more than they want, they stop that. And maybe if it's gone too far, for example, like when the banks got in trouble last year, they turn it full on again and up assets go. So it's really all about the money flow, because money flow is what really drives the markets. We're used to the old days when supply and demand was what dictated the money flow. But now it's the printing press, or the lack of the printing press, that determines the money flow. And, you know, the Fed is trying to get its balance sheet down. It's trying to get rid of the reverse repo a facility, which actually indicates how much more money is in the market than there needs to be. But obviously, if they turn it one way and they just let it run its course, you're going to get a nasty crash at the end of that. So they are actually zigzagging with the money supply. And when they zig, I put more money in, up goes the asset prices. And when they zag, down they come. But it all goes together. So all those old correlations, like, oh, gold's going up because there's inflation, or the dollar's going up and gold's going down, and interest rates are going this way and etc. are going that way. That's all broken, because it's all about how much money is going into the system, which is the big picture, and how much money is being pulled out. So that is what is underneath all this, driving everything.
With inflation in the US, the core PCE data rising harder than expected this past week, what's going to happen next with Fed policy, do you think?
Well, I mean, I think they've said that, you know, hold your horses, thinking they were going to lower interest rates. Obviously, inflation is going to come down because we're going to make it come down. And obviously, interest rates will come down then. But, you know, this is not going to happen fast.
How are they going to make
what they're saying?
How are they going to make inflation come down, Clem?
Well, it's just money supply. They just take money out of the system. But obviously, if you take it out in a big hurry, everything collapses. If you take it out slowly, then, you know, things moderate. Because what you have to understand is inflation is caused by more money. And the moment you stop making more money, inflation will slow and stop. You have to keep making more money to get more inflation. So it's not like I've printed a load of money last year and that inflation is going to run forever. It will run until the supply of money balances with the supply of goods. So you have to make more money to get more inflation. And of course, your joyous government is doing a good job of making big deficits and spending like a drunken sailor. So that is really what's pushing the more money. And that is really what they're fighting against. I mean, it's not.
If you were Jerome Powell, would you be frustrated that Congress is spending, like, in your words, a drunken sailor, even though I'm over here, you're over there, you're Jerome Powell, keeping rates high?
I think he said as much. I think the Fed has said, "Oh, I wish Congress and the government would kind of, get their budget under control." Certainly, IMF just came out and said it. And, yeah, you can't go on, as everybody knows, you can't go on digging yourself deeper and deeper into debt. But what people also don't realize is all that balance sheet, that government balance sheet, actually means that of that deficit, there's several $trillion worth of assets that the Fed holds that they could just cancel if they wanted to. Now, people say, well, it's a private company, the Fed. They can't just, cancel all the government debt that they've got in their bottom drawer, but they could. If you think of a balance sheet, the actual government's balance sheet has got this asset in it, which is their own debt, which is what all the QE was about. If you're buying back your debt from people and handing out luncheon vouchers, sorry, dollar bills, you're actually reclaiming your debt. So, there's a lot of moving parts underneath it all, but there's this inflation, which is more than the ideal inflation. Well, that's what they're admitting to anyway. It's probably a lot higher in reality than they're actually the stated figures. And they will be able to get that more under control. But if you have your government spending, well, forcing the system to print more money effectively, then you are going to have elevated inflation. But the other thing to think about inflation is, how do you fix the national debt? Do you pay it back? Or do you just make it a smaller number by having a certain level of inflation gnawing away at it? And so I personally think that there's a sort of new level of ideal inflation that's higher than 2%, and it's more like 3-4%, maybe as much as 5%, real inflation. And therefore, we're going to have this elevated inflation for a long time.
Okay. What do you think the Fed is going to do this year? How many cuts are we getting, if any?
I think it's going to be avoiding being blamed for anybody getting re-elected or not re-elected. Because ultimately, if they crash the market, I think Mr. Trump will romp home and everyone will be pointing at the Fed saying, they did that. If they hadn't done that, he wouldn't have got in. And if they do something else, the other side will go, the Fed did that, they did that. It's their fault, they did that. So I think they want to be very neutral. They want the market not to crash. They want the market not to zoom. They want it to be very calm, because they don't want to be blamed as interfering with the American presidential election.
Well, let's do speculate here. If the markets do crash, who would investors point their fingers at? Is it the Fed? Is it the government? Is it the war in the Middle East? Is it oil prices going out of control? Is it corporate earnings not beating expectations? Who would,
If the
in other words,
market
what would the
crashed,
catalyst be? Yeah.
if their market crashed, the media would blame it on whoever is on the other side of their political argument. And as we know, the media in America these days is quite sort of, leftish. So, they would say, Trump got in, it's all the Fed's fault. They're not going to put themselves in the frame for what's going to happen in November. So they're going to try to keep everything calm, and they are keeping everything calm. And the underlying issues of inflation are starting to, creep around the edges. Gold should have been at this level 2 years ago. I mean, we've had the inflation. Gold's meant to move the moment it sniffs inflation, but it's now only the underlying systemic inflation we've had that is pushing this stuff up.
Yes. Okay. Let's talk about your market outlook. Starting with gold and Bitcoin, you wrote an interesting article on Seeking Alpha not too long ago, and you said gold's rally to the predicted $2,600 level, which is your prediction, is getting very close. The dynamics of Bitcoin's impact on the gold market have changed, and this is good news for gold bugs. Gold could run much further, and a vertical move is possible. However, TA reviews $3,000 is still a long way out. First of all, why do you think Bitcoin running up is good for gold?
Well, there's been a sort of a split, because now Bitcoin is part of the financial system. It's got an ETF, it's got futures, it's got options. It's now in a nice position to be predated on by Wall Street, and it will. So I think the financialization of Bitcoin means that it's no longer the wonderful replacement for gold that it has been. It will still be a flight capital, great flight capital. It'd be better than gold for that. But as a haven, as a sort of gold kind of thing, it's now It's now different. There's now been a fork in the road. Now has got an ETF. It's changed. But the other thing is my conspiracy theory, and I know your listeners love conspiracy theory, is that there are
It
a
depends what
group
the
or two.
theory is, but yes, let's listen to it.
There is a group in Wall Street, maybe two or three groups, and their game is to milk gold through ETFs, futures, and options. And they basically shake that around and drain that market of the money that's invested in it by the likes of us, right? They've cornered the gold market and they've basically suppressed the price. Now, Bitcoin is much younger, more naive, easier target for them, and they will shift their gaze from gold, effectively manipulating gold, to manipulating Bitcoin, because Bitcoin is a bigger, more exciting, more novice market with a lot more opportunity. Now, they can't do both because there's only so many of these people, and two, they've only got so much capital to work with, because a big bank will say, there you go, do your trading thing, here's your capital allocation out of our tier one, and that's what you've got. You make the money with our tier one capital and off you go. If they move focus from one asset to another, they can't just get more capital to do that, because the bank will say, no, risk says that you can't do that. Compliance says you can't do that. You've got your capital, do what you need to do with it. You can't have any more. So effectively, they'll take their boot off of gold and put it on the neck of Bitcoin. And I think that is what is it that is quite possibly going on right now. So gold gets to run because it's not being beaten up down a dark alley all the time anymore. It's Bitcoin taking the pain from the institutions that trade these commodities, and now it's the Bitcoin that's being kind of under the cosh, whereas gold has got finally it's not being bullied.
Well, we know the ETF flows data. I mean, most of the outflows came out of North America. Inflows came from Asia, so that was supporting some of the gold price movement. But theories aside, Clem, looking at just the charts, is it odd to you, or perhaps not a surprise anymore, that Bitcoin and gold have been moving closely correlated with each other all throughout this year?
I mean, yes, because Bitcoin's no longer an uncorrelate. The correlation of Bitcoin, or rather the opposite of the correlation of Bitcoin and the financial markets, is no longer a thing, because it's now part of the financial markets. It's now being absorbed by the financial markets, and Bitcoin people say it's now being adopted. But before that, it wasn't correlated because it wasn't linked up. Because I could go on and I could push down a stock in London that makes artificial hips, and push down an artificial hip maker in New York without going anywhere near it, because that's the way these markets works. They're all correlated. So if you push down one artificial hip manufacturer in London, you will automatically push down the artificial hip manufacturer in America. And if you fat finger copper, you'll fat finger oil, and you'll fat finger cotton, and you'll fat finger orange juice at the same time, because they're all tied together by all sorts of fancy arbitrage and market making.
You said that gold is heading towards 2,600, but $3,000 is not in the cards anytime soon. Why not?
I just can't. I just can't technically analyze it to do it. I just can't draw any lines on it. They get it there. I mean, it's like one of those things you go, well, you can always draw fabulous lines on charts all day long, and you can say, well, if I put it here and I put it there, it gets to 6,000, but I cannot use any of my tools to get it past 2,600. What I wrote before it broke out, I actually wrote a piece in Forbes, I think it was, and I said, if it breaks out from here, it's going to go to 2,600, and it broke out and went straight to 2,300. So it's simply a technical analysis which shows you the dynamic of the past trading, that you're able to kind of see, roughly speaking, which way it will go, because of the way that it's behaved in the past. And if you believe in that sort of mumbo jumbo, which I happen to.
You, you don't believe in the random walk theory when things move
Well, I do
independently of the
believe in the
past?
random walk theory, but if you actually look at markets, they've got two components. They've got signal and noise. And you can see that quite easily yourself. If you put a moving average on a chart, you'll see the signal, which is very small and subtle, and you'll see the noise as the background. And the noise, depending on different markets, is quite high. But the signal under it is actually the non-random component. And there is a non-random component, but it's quite a small component. So you're really trying to ascertain the non-random component of the gap between perfectly random and the sort of random that we have in markets. And that's where your edge is, if you can find out about it.
Okay, so what's your analysis on Bitcoin, right? It's run up to 74,000 at one point, now at 63,000 as we speak on the 26th of April. It hasn't moved below 60,000, but it's stuck in a range. What's next, do you think?
It's repriced there. And basically the call is that it? Or is there more to come? Now, I personally think we've got another leg up. And again, with my magic voodoo charting, I can see easily 100,000, probably 120. Anything more than that, I think, is a stretch. But if it does do that, the top will be completely unpredictable, and it will probably only be there for an hour. It'll go up $20,000 in an hour and come back down again, and you will never see it. So that final peak that you'll look at the chart and say, oh, it went to 100,000, will be something so transitory that only the traders will actually get to trade that. But definitely, if it breaks out from here, it will go 100,000 and maybe a bit more. I mean, I think that I think it's got another leg. I don't think we've seen the end. I think the halving, which has always driven the price, is something that people find hard to trade for, because there's just this sort of drying up of supply, and that drying up supply has a very sort of slow burn effect that suddenly at some point creates a big repricing. So I think we will see a big repricing sometime in the next 8 to 12 weeks.
I've heard all sorts of analysis on past halving patterns and cycles. I've heard that before. In past halving cycles, the price has historically dropped post halving immediately, and then climbed back. And now we've dropped. So now it's time to climb. I mean, how much of the past is indicative of what's going to happen now?
Well, if you look at the last run back in 4 years ago, the chart that we're seeing now is exactly the same, almost tick for tick. I mean, certainly for big move and for big move. And that indicates a sort of 100,000 plus final level. The question is it going to have that final move? That's the only call you've got to make. Have we seen the top, or have we got one more move, or maybe more, but one more is enough? And I think there's one more. It's not fate, because we have got this regulatory environment which is pretty aggressive. And I think that kind of puts a damper on the picture. This time round, there's none of these crazy new tokens coming out of left, right, and center. None of these amazing projects appearing out of nowhere like we did last time round. It's really only the same old, same old. So, and that to me is a little bit bearish. But I do think we've got another leg, and I do think that will happen sometime in the next, well, certainly before the end of summer. And I'm kind of hanging in for that.
Okay. We haven't talked about the US stock markets right now, or so far. So let's review there. We have to consider everything we've discussed so far, your macro views, inflation, and the Fed, and perhaps a correlation with other assets like gold and Bitcoin. Are you expecting a bounce from this pullback that we've seen?
Well, I would imagine that we're going to see, sideways trading, frankly, because going back to the Fed not wanting to seem to be influencing the election, what people would want to see in that case would be not much down and not much up. So sort of sideways behavior. I mean, the market pulled back, and then out come the bad news on inflation. So you've got to wonder whether that. Obviously, all the Wall Street banks are so smart. They managed to work that out a few weeks before the news. I mean, obviously, it's all those analysts working it out. So, that is what I think we saw. We saw that fact that interest rates aren't coming down as fast as expected. And that's the move down. But I can't see the market running away. I can't see that. I can see that it's heady right now. I think you could be prepared to have a little bit of negative market action after the election, one way or the other. But I think it's nothing special. No crash, no zoom. Lots of noise, lots of noise up to November. The UK market is very interesting though. It's been dead as a doornail for a whole generation, and it's broken out. So very interesting that the UK market suddenly sparked into life.
Yeah, what
And
happened? What's going on in the UK across
well,
the
it's very
pond?
interesting. The market's made all times high. It has literally been as dead as a doornail since 2000. I mean, the whole generation. It's almost Japanese in how really poor it's been. It's been going sideways for 25 years. Americans wouldn't recognize the chart. They go, "What's that? What's that? How can that do that? It's a stock market." But now it's made all-time highs, and it's there's is the beginnings of a big M&A takeover berg coming through the system. There's lots of takeovers. It's been done for 2 years, and now lots of companies are being sized up for takeovers, and it's broken into new highs, and it's potentially got a long way to run. Certainly 25% in the next year, 18 months. So that's quite, as a Brit and a British investor, that's quite exciting.
How much did Brexit ultimately play on capital markets in the UK not performing the way the American counterparts did?
They're blaming Brexit for a lot, but in reality, it's has been messed up. The stock market's messed up. There's a transaction tax here. Can you believe that? Transaction tax. This is not the Middle Ages, but it is in London. So 0.5%. If you buy a stock, they clip you for 0.5% of your capital right there. And the market is got no liquidity in it. The pension funds basically do not buy British stocks. They were told not to about 20 years ago, so they stopped. So they only own like 0.5% of the British stock market. I mean, you couldn't really make it up.
Okay,
But
so it's regulatory hurdles, not underperformance of British companies themselves.
well, they're not British companies, half of them. The big guys are all international, like HSBC and Shell. And they're valued at approximately half of what the American equivalent would be valued at. So that
Okay.
gives you a sense of how messed up it is. But it seems to be something's going on in the matrix, because it's on a tear. It's moved. Somewhere a tree fell in the forest, and maybe nobody heard it, but it's certainly having an impact on the market.
How do you feel about the US tech sector? We've seen a bifurcation of the Mag 7, whereas last year the Mag 7 were called the Mag 7 because they all performed well. This year, Apple's not doing great, Tesla's not doing great, Microsoft and the others are fine, right?
Well, I mean, I think it's very interesting because something massive happened, and that's AI. And that is truly earth-shakingly important. And the Magnificent Seven are so incredibly valued. I mean, I've given up even trying to conceive why they could be worth that much. So I think that's a big drag on the whole market. But I think if they do start to fail, the money will just rotate into better value. So there will be a move potentially away from those into better value stocks. But I mean, the American market is very volatile in many ways, and in some ways it's very predictably bullish. But you've got to get a nosebleed when you look at the Nasdaq, and I'm English. We have 5 PEs. Not 5,000 PEs. We're lucky if a company's 1 time sales, not 10 times sales. So the actual valuation metrics in the US are incredible, but like all markets like that, they can always get more incredible, and they seem to have done so over a long time. I think that the American market will continue to be stellar. We won't see a crash. We might see a rotation out of the incredibly highly valued stocks. But I think ultimately, again, it's all down to the Fed and its liquidity provisions. And I don't think that they are going to trash the stock market anytime.
Well, speaking of transaction costs, this is an indirect transaction cost that's happening right now in North America. Both Canada and the US are proposing increases in capital gains taxes, as you're familiar, probably in the news. Canada, recently, the Trudeau government has proposed an increase of up to 67% with individuals with more than $250,000 of capital gains in a year. The US has something similar, except they're going up to 44%. There's conditions, obviously, in that. Obviously, neither of these have been passed. They've been proposed, but a lot of people, investors in particular, are already talking about the possibility of capital flights away from both countries. What do you
Well,
think
I
is going to
think the
happen?
unrealized gain proposal, that really would absolutely destroy the American economy. It would absolutely push it into the Pacific Ocean. So, I mean, I don't think, well, I mean, to be honest with you, I'm not going to interfere with your election, but I think a certain New York property magnate will be president shortly, and I think that that will mean that that sort of thing will go by the by.
Why?
Um,
Because of the taxes?
no, I don't think the Republicans in the White House are going to do anything like that. Do you?
No, I mean, why? Okay, I mean, why do you think Trump has a better chance at this point? Is it because of the tax proposals?
No, I just think that the last election, everybody came out to vote because the opposition absolutely were motivated to get off their rear ends and go and vote against Trump. And a lot of Trump's people came out as well. So it's an unprecedentedly, attended election. And I think
Right.
this year the Democrats are not going to get out in the same way. They're going to go, oh no, oh, I'm not going to vote. And therefore, all the Trump people come out, and rather than all the Democrats coming out, the Democrats won't come out so much, and therefore he'll win. Just
Okay.
because the Democrats won't come out en masse like they did last time.
Okay. Well, I mean, that aside, good point, but we have to consider that historically it's difficult to kick out an incumbent unless a recession happens where the economy goes into some sort of shock. Hasn't happened yet,
Well,
right?
the whole political system in America is in shock. It's in trauma. It's a total disaster area, isn't it? So I think that people actually care a bit more about the American political system to be in utter shambles than they do about even the economy. So
Okay.
we say it's 50-50, right? Really, but I think that, and I'm not supporter of any side, to be honest, but I think that the Democrats will not come out in force like they did last time, and therefore they will lose because the current administration appears to be such an utter shambles.
This capital gains tax proposal is evenly split, well, not evenly split, but it's quite split in its public opinion. On the one hand, obviously you have people in finance not supporting it for obvious reasons, but then on the other hand, I'm reading comments on Reddit like if it hurts incredibly wealthy people, I'm all for it. If it doesn't affect me, I've got no capital gains tax to pay, doesn't affect me.
Yeah,
Let's
well,
redistribute the wealth.
if you read comments from 15-year-olds, then I suppose you'll get that opinion, won't you? But
What is the ultimate? Walk us through what would happen to our economy should this bill be passed.
well, at the end of the day, the financial markets finance industry and commerce and corporations. And if you choke that off and people go, I can't be bothered to invest if they're going to take half my profits. I mean, after all, I knock myself out, I get clunked in a crash, I buy a dodgy stock, I lose my shirt. And now I've made a profit. They're going to take half of it. I can't be bothered. I'm not going to do it. So your liquidity dries up. The amount of money in the ocean of capital lessens, and company valuations fall, and they can't borrow money, and they can't issue equity. Well, you get in the sort of spiral that the UK's got into. You get in a death spiral. And I mean, after all, America's pushing a death spiral as it is, without cutting its own throat. And if people look, say, you're going to take half my profits. Well, I won't make them then. I can't be bothered. You take away the incentive, you take away the action. You're the Apples of this world get to be like the Arms in Great Britain. Arm, fantastic company, basically dominant chip in all mobiles, and some Japanese company picks it up for peanuts, and then holds on to it for a couple of years, and then brings it back to America for double the price. So you go into that zone. The Roman Empire actually does fall.
So what we're going to see is capital relocating to other, well, where are they going to go? I mean, what other
People are
stock
just
market
not
in the
going to do
world?
it. They'll buy bonds. They'll buy government bonds and see them eroded by inflation. They'll put it under the bed. They won't play that game. They just won't play. And if they don't play, then the game stops, doesn't it? It's America's got a fabulous. You could put a transaction tax in. See, you like that? It's only 0.5%. Yay!
Well, there's
And
going to be
then
a
you
lot of
end up with a
funds.
stock market with half the value.
There's going to be a lot of funds moving offshore, I'm sure. So,
Well, they won't do it. They won't do it. I mean, the politicians are mad and stupid, but are they that mad and stupid? I mean, I don't know. You tell me.
you should come visit us, Clem, and see.
I see from
I,
afar. I
I
see
know
from
you're in
afar.
Monaco, but come firsthand. I'll take you out for a drink. I'll show
Uh,
you around my town.
I'm in crypto. I'm not sure I can even come.
Um, okay. What you said, America is pushing itself deeper into a death spiral. What are we referring to, Clem? What is wrong with the American economy, taxes aside?
Well, the American economy is doing pretty good, really, considering the mess it's been through. But the underlying power behind all economies is the political system. Yeah, governance, the governance of the first world is actually pretty good in comparison with the governance of everywhere else. So, if you wanted to complain about American governance, just go to one of the third world countries and see what governance really looks like. But nonetheless, you can see that there's a massive problem in the whole structure. And that is the base for everything is built on. So if you start to lose that as lose the efficiency or the sophistication or the accuracy of your governance, then the whole system falls to bits, doesn't it? Everything falls to bits. It's the foundations on which everything is built. And if those foundations start to subside, you're going to get a lot of wonky things, aren't you? And that's what you're getting, isn't it? A lot of wonky situations.
Well, put it this way. So the GDP growth rate slowed to 1.6%. Latest numbers that came out last week, or this past week, rather. The expectation was a bit higher, 2.4%. I know these are only preliminary numbers. They may get revised, but in any case, they did not meet expectations. Is the economy slowing down, Clem? Are we seeing evidence of a slowdown?
Well, it would appear that the economy has already slowed down and that there is the feeling of recession. Now it's coming through in the numbers. So it's sort of like, that it appears that they're trailing numbers, and what people are feeling is what they've been getting. Now, the point is, which is the direction of travel? And for me, the direction of travel for the global economy is up. So everybody's, saying, oh, China, what a terrible situation. Oh, they're finished. Oh, it's all over for China. But actually, they're just in the trough and they're probably coming out of it. So it's not where you are, it's the direction of travel. And the direction of travel of the global economy is up, is of repair, is of improvement, outside of all the lunatic governments, having war with each other.
Is it fair to
So
say then, in conclusion, is it fair to say that you're still feeling relatively bullish on the markets this year? For gold, you think it's going to go up. Bitcoin is got upside. The stock market, well, the economy has no serious issues yet, so the stock market should do well. Correct or no?
okay, I'm bullish
Yeah.
because the time to be bullish is when you're at the bottom, not when you're at the top. And you should get more and more bearish the further the ball runs, right? And if you're getting more bullish the further a bull market runs, you're going to have a nasty problem at the end of that. And if you get more and more bullish the further the market or the economy goes down, you're going to be in great shape when it turns, aren't you? So you should always be bullish at the bottom, which is, I think we're probably past the bottom actually. Overall, the machine is spinning up, which is what I consider to be the economy. The numbers from yesterday, not necessarily so interesting, is the status of the machine. The machine is spinning up, and that will lead to 2 or 3 years of recovery. Not quite same as boom. There is definitely 2 or 3 years of recovery ahead for most of the world. So that is a bullish situation. And if you're buying when everybody's crying, that's the right time, isn't it? And if you're selling when everybody's yelling, that's also the right time. I just made that up, I should copyright that.
We'll look for that in your next report. So sum up, Clem, what are you most bullish on this year? The asset that you think will grow the most?
Well, I think that if Bitcoin or crypto takes a run, then that will be a big run. So in a way, it's not about guessing the direction; it's about guessing how far that direction will go if it turns. Right. So it's like, oh well, gold will go up to tomorrow $10. That's not so interesting. Gold will go up over the next 6 months, 310%. That's more interesting. So and Bitcoin is a long way to run if it breaks out. So that's quite interesting. So I'm a position for that. The UK market has got a long way to run over the next couple of years, and I'm very positioned for that. The American market, a little bit choppy, I think, in the medium term. But the AI stuff, that is absolutely massive. Now, NVIDIA is already massive, but anything connected with anything to do with AI and computing and chips and hosting and all that stuff is just going to be gargantuan over the next 10 years. So everybody should be scratching their head about how to position themselves for that. and the energy sector is going to be very interesting. So I'm quite bullish on that. So I'm just generally bullish. I mean, we're in a comeback situation, and I think we're going to see a little bit of a renaissance in America in the next 2 or 3 or 4 years. I think that, everybody realizes that there's a bit of a pickle in the US right now, and that will be a thorn that will be grasped, and there will be progress there. And I think the same is going to be in the UK. And I think the overall global economy is going to be in recovery. So, it's a new era we're in. What is the shape of that new era? I don't know, but it's a new era, and I think it's going to be a good one.
Where can we follow your work, Clem, and read more
Well,
about your thoughts?
you can see my stuff on Forbes. I have a bad habit of being right, occasionally wrong, but I don't tend to admit to that. I also write for Seeking Alpha. Got a load of books on Amazon if you want to learn how to invest 10 years ago. And so, yeah, and on your great show, of course.
Excellent. Well, we'll put links to Clem's work down below. Make sure to follow him and subscribe to this channel. Like and subscribe. Thank you very much, Clem, for watching the show. Or not watching the show. What am I talking about? You're not watching and also being here, but thank you for being here. That's what I meant to say.
David, thank you very much for having me. And by the way, viewers, don't forget to subscribe and like and hit that bell.
Yes, thank you. Thank you for the reminder. We'll speak again soon. Always great catching up with you, Clem.
Cheers, David. Bye-bye.